For nearly 8 decades, one currency has reigned supreme over the global economy, the US dollar. It powered world trade, built empires, and became the ultimate symbol of wealth and power. But today, a question echoes through boardrooms, central banks, and corridors of power. Is the dollar's reign finally coming to an end? To understand the possible fall of the dollar, we must first revisit its remarkable rise. After the devastation of World War II, one nation stood tall above the rubble: the United States of America. Its factories were intact, its economy booming, and its gold reserves overflowing. In 1944, as the world searched for stability, leaders from 44 nations gathered at a small town in New Hampshire, Bretton Woods. There, they made a decision that would shape global finance for generations. The US dollar would become the center of the world's economic system. Every other currency would be tied to it, and the US made a promise that every dollar could be exchanged for gold. It was a promise built on trust, and trust built on power. America possessed most of the world's gold, most of its industrial capacity, and soon, most of its confidence. That trust didn't just bring stability, it brought dominance. By the 1970s, even when President Nixon broke the link between the dollar and gold, the world didn't abandon it. They couldn't. Why? Because the lifeblood of modern civilization, oil, was priced in dollars. And with that single move, a new system was born, what economists now call the petrodollar system. The 1970s marked a turning point, not just for America, but for the entire world. As the global economy reeled from oil shocks and inflation, Washington quietly made a game-changing pact with an unlikely partner: Saudi Arabia. Behind closed doors, the two powers struck a deal that would reshape global finance. The agreement was simple, but revolutionary. Saudi Arabia would sell its oil exclusively in US dollars, and in return, America would protect the kingdom and guarantee its security. It was brilliant geopolitics, a fusion of money, oil, and military might. Soon, every nation on Earth faced a new reality. To buy oil, the fuel that powers civilization, they first needed US dollars. And so, central banks across the globe began hoarding dollars, turning them into reserves and cementing the greenback's dominance. America, meanwhile, discovered an extraordinary privilege. It could print the currency the world demanded, using it to fuel its own economy, fund its wars, and expand its influence. But power built on dependence comes with a question no empire can escape. What happens when the world begins to question the system itself? Over time, Washington discovered a new use for its most powerful export: the dollar itself. What was once a symbol of global trade became a weapon of control. Foreign assets were frozen, nations were cut off from the SWIFT system, and crippling sanctions were imposed at the stroke of a pen. For countries on the receiving end, the message was clear: Russia, Iran, China. They all began to see the same truth. If your economy runs on dollars, your sovereignty runs through Washington. Every sanction, every financial blockade sent a signal to the rest of the world. Build your own system, or remain vulnerable. And slowly, quietly, that's exactly what they began to do. For years, Beijing has been building an alternative system, brick by brick. It launched CABAS, its own international payment network designed to rival SWIFT. It signed currency swap agreements with dozens of countries, ensuring that trade could flow, even without a single US dollar involved. Then came the real game changer. China began encouraging oil and gas deals in yuan, especially with Russia and its Middle Eastern allies. When President Xi Jinping met with Saudi leaders and talk surfaced of settling oil in yuan, the world took notice. Headlines thundered, "The end of the petrodollar." And for once, it didn't sound like an exaggeration. Beijing's message to the world wasn't loud, but it was unmistakable. The era of dollar monopoly is over. In 2022, the world witnessed a shock that shook the foundations of global finance. When Russia invaded Ukraine, the response from the West was swift and unprecedented. Over $300 billion of Russia's foreign reserves were frozen overnight. For Moscow, this wasn't just economic punishment, it was a revelation. The dollar-based system it had relied on for decades could be weaponized in an instant. What had once been a neutral financial framework now looked like a geopolitical trap. So Russia made a choice: It began trading in rubles, yuan, and even rupees, rewriting the rules of global commerce on its own terms. It forged closer ties with China, Iran, and India, laying the groundwork for what it called de-dollarized trade. And as those deals took shape, something began to shift. The ripples spread across continents, across markets, across minds. For the first time in decades, the world started to imagine a future beyond the dollar. What began as a loose political alliance has evolved into a strategic counterweight to Western dominance. The BRICS nations, Brazil, Russia, India, China, and South Africa, are no longer content with symbolism. They're building an alternative. In 2024, the bloc made its boldest move yet. They proposed a new cross-border payment system, one designed to bypass the dollar entirely. And behind closed doors, discussions began about something even more ambitious, a common BRICS currency, potentially backed by gold or key commodities. The idea sent shockwaves through global markets. For decades, the dollar's supremacy had been unquestioned. But now, that certainty was fading. Imagine this: half of the world's population, and nearly a third of its entire economy, trading freely, without ever touching a single US dollar. That's no longer a distant dream. It's a deliberate strategy, and it's already in motion. The Middle East, once the bedrock of the dollar system, is diversifying. Saudi Arabia joined the BRICS bloc. The UAE and Iran are settling oil and gas deals outside the dollar. Even African producers like Nigeria are experimenting with local currency trade. As one Saudi analyst put it, it's not about replacing the dollar overnight, it's about reducing dependence on it. That's how revolutions begin, not with explosions, but with quiet transactions. Despite all the noise about its decline, let's not bury the dollar just yet. For nearly 8 decades, the US dollar has been more than just money. It's been the language of global trust. It's backed by the world's deepest financial markets, a strong rule of law, and a military presence that spans the globe. Even today, over 58% of global reserves are held in dollars. Most international loans, trade contracts, and global savings still rely on the greenback. Why? Because no other currency combines stability, liquidity, and global reach quite like America's. The euro is fractured by politics, the yuan constrained by control, and cryptocurrencies remain too volatile to anchor the world's trade. So yes, the dollar still reigns supreme. But the world is changing, and the cracks are no longer invisible. Each new alliance, each alternative payment system, each oil deal outside the dollar's orbit adds a tiny fracture to the once unbreakable foundation of America's silent advantage. A quiet rebellion is spreading across the world, not fought with armies, but with currencies. From Asia to the Middle East, nations are beginning to ask a dangerous question. Why should Washington control our wallets? This growing sentiment, part pride, part survival, is fueling a new movement that economists call financial nationalism. Countries are building their own payment systems, their own reserves, their own rules. In China, India, and Russia, alternative financial networks are taking shape, ones that no longer rely on the US dollar or the SWIFT system. At the same time, nations are turning to dollar-backed reserves and experimenting with digital central bank currencies to reduce dependency on Western finance. China's digital yuan is already being tested for cross-border payments, fast, efficient, and completely outside Washington's reach. And with every new transaction that bypasses the dollar, America's financial grip loosens just a little more. The more these systems grow, the smaller the dollar's shadow becomes. If the world begins to trade, invest, and save without the dollar, America could lose one of its greatest superpowers. Sanction freedom. For decades, the dollar has given Washington an unmatched privilege, freedom to control demands, and to punish the very system others depend on. But if that trust fades, so does that privilege. A weaker dollar order could mean higher borrowing costs for the US government, diminished political leverage on the global stage, and the rise of new financial power centers in Asia, the Middle East, and beyond. Yet for many developing nations, this shift might feel less like chaos and more like liberation. Freedom to trade, to invest, and to grow without waiting. And as the world quietly rewrites its financial rules, one question remains: will the dollar adapt or become the next empire to fade into memory?